I don't think we'll have Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners, weigh in on that. Craig, you like my idea of a spring cleaning day across the city?
John, if we can coordinate between different townships to actually do leaf pickup at the curb, I don't see why we can't coordinate what I call spring cleaning day. You just named it. You should run for a township position. This is grassroots community activism at its best.
I do that, but then I can't do this job, Craig, while I do that. So I'll just stay here on the radio talking finance and all those sorts of things. GetRetiredStayRetired.com is where you can reach Craig. Craig, we've talked about interest rates a lot over the past few years. And first of all, thanks for hopping on a little early with us with Know Your Money Matters tonight. But, I mean, I know the president wants interest rates lower. I feel that would make a lot of people feel better about certain things. But, Craig, wouldn't that be indicative? Shouldn't we wait to lower interest rates until something is broken?
Well, you have to be data dependent. You have to make decisions that are data dependent. Because if you make decisions based on sentiment, which is how you feel, it's not a repeatable process. So, John, what you said is right. We'd all feel better with a little bit of Tylenol right now. Give me some rate cuts. But we got to do it based on data, and the Fed's in a pickle. We don't want to cut rates and re-spark inflation. At the same time, we might see slower growth. It's a bit of a mess, but give it some time. I'm convinced we'll get our 3 rate cuts still in 2025. Let's see what happens in June.
You don't see this as a political move by Jerome Powell. A lot of people are countering that, well, they lowered rates right before the 2024 election to try and help Joe Biden, and now they're not doing it to try and hurt President Trump. I don't see it that way. I don't know how you feel.
I do not see it that way at all. I mean, if anything, I say the Fed pays attention to the wealth effect. That's, do people feel secure? So there is something like the wealth effect. But they have the dual mandate. It is nothing more than inflation and unemployment, right? They need to maintain stable prices and try to maximize employment. Whether anyone wants to hear this or not, the unemployment rate's pretty darn low, John, well below the 30-year average of 5.2, well below the long-term average of 5.7. Check the box there. We've been making great progress on inflation, but that might start changing depending on trade and tariffs.
We're just getting started with Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners. Get retired, stay retired. I got some more questions for Craig. He's going to hang on the line. Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners. Craig, for a couple of years, you and I have talked about the numbers being pretty good for the economy, especially when inflation came down. Job market pretty good in terms of the macro number, the unemployment number, but people just not feeling it. We had a text message from someone that says, why does it seem like the job market is really dragging? Craig, can you explain that? Because there is a low unemployment number, but I do hear from countless people that they've been laid off and it's impossible to find another job.
Well, there's a couple of things that could be at work, and some of this is conjecture, not fact yet, John. Number one, it's true. It's graduation season. And when you think of kids graduating from college, I have one who just graduated. There's a lot of people in areas of finance, people in areas of technology that are having trouble getting those initial jobs. Could that be because generative AI and agentic AI is already disrupting? Might be. Part number two, it's taking a delayed approach for those who are mid-career to find their next job. Is that the jobs aren't there, or is it that the jobs are no longer located where people want to be, which is work from home, now that there's RTO, return to office? Or is it number three and number four? Again, it's all conjecture, but if the Fed makes decisions based on data, they have to use the headline employment numbers, but I certainly empathize, depending on who sent that text, the point of view could be appropriate to that particular person.
Right, and that's a nationwide number, that 4.2%. Different sectors often experience the recessions or the good times at different times.
Yes, it's very cyclical. Not everything moves up and down at the same point in time. Every industry is unique. Every industry is different, and we have to look at it through that lens. But when we're making broad policy decisions, as you and I are talking about investments, stock markets, and interest rates, it has to be based on the national, not the personal.
Boy, a couple of weeks ago, there was a lot of fear in the market, Craig, and then we had a rally of 9 straight days, the S&P 500 on a roll, and pull back the last couple of days. But is the fear of tariffs over, or is everyone just kind of, they don't want to miss the potential rally, so they're all buying on in, and we just kind of wait for the next move?
Well, let's put a number to it, John. The Dow Jones Industrial Average, which was up again today, is over 41,000. We were at 36,000 3.5 weeks ago. That's a 5,000-point swing 3.5 weeks ago. That should be a reminder to everybody that sentiment, which is emotion, is important for each of us as humans, but it doesn't have a part of a disciplined, regimented system. John, are people still fearful? Of course they are fearful. Do the sentiments show that people are negative? Yes, it does. But the market has improved because things have improved. The suspension of the reciprocal tariffs did in fact happen. The exemptions for numbers of goods that we import, think pharmaceutical, durable medical equipment, chips, technology. There's been all sorts of exemptions. So I would argue the picture of trade has improved, but we need to get clarity on trade, most certainly going into the end of the second quarter, so business owners, large, mid, and small, can start making good capital allocation decisions.
I think the markets recognize that the president does have a guardrail in terms of there's going to be an election next fall for midterm elections. He saw where the Treasury numbers were going. He was being urged by his advisors, this is no good where this is happening. And I think that he showed the market that there is a limit to all this, that he is not willing to crash the entire economy to win the tariff battle that he has been advocating for decades. Maybe I'm wrong there, Craig, but I think that the market is betting that they've seen where the limits are.
I think you're right, John. It shows that we live in a country that is free. It shows that we live in a country that does still maintain rules, law, and order. You mentioned the midterm election. You mentioned the bond market. You mentioned sentiment and other advisors. Those are all checks and balances. While POTUS, the President of the United States, whomever man or woman that might be, they have incredible authority and power. It's never absolute in America, and I think this is evidence of just that, and it should be reassuring to people when they look at it through that lens.
It's what makes this trade war hard against China, in my opinion, Craig. Those things that you just mentioned, they don't happen in China. Leland Vitter was on earlier. We were talking about protests outside of factories. Yeah, those are going to get shut down by the Chinese government. I hate to be pessimistic about it, but I don't see this massive uprising of capitalistic democracy out of China. They can fight a longer game than the U.S. can.
They can, and it's important that we know that. And China knows that, which means everyone knows that, which means it's collective wisdom. It gets built in. And what I'm going to hope for, knock on wood, is that when everyone gets together in Switzerland this coming week to start hammering some of this out, that we see some sanity come to the decision-making process. And I think markets moved up in part because of that today. I think markets moved up in part because you had good news from several companies reporting, like Disney, et cetera. I think markets have also moved up because the president is no longer publicly attacking Jerome Powell, and that's good because we should have stability and independence in the institution that's the Federal Reserve.
Craig, I got to go. GetRetiredStayRetired.com. What's your 20-second pitch to people? You're obviously a smart guy that knows a lot about this stuff.
Hey, everybody, you always get a second chance to do the right thing in life. You always get a second chance to do the right thing in investing. Markets have come back. Lots of people's portfolios are near break even for the year. That is an opportunity if you want to de-risk, because recessions have gone from possible to maybe plausible, still not probable. get in touch with us. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. Jon, thank you so much for allowing me to be a part of your show and with your listening audience again on a Wednesday evening.
Absolutely. Craig, always love chatting with you. Talk soon, okay, bud?
You good.